I'm Nithya from Commerce B&I. Today I'm going to discuss about the income tax. First one, meaning of tax. A tax may be defined as a compulsory extraction made by the central government from the general public. It is the financial charges imposed on individual or legal entities by the government in pursuant to its legislative authority. The proceeds from tax constitute a major sources of revenue to government that spends collected amount for the common benefits of the society. The structure of Indian taxation system, constitutional provisions. Indian taxation system is one of the world largest taxation system in the term of it is wide application on large number of the people and other business entities. It is a well structured system derived from the Indian constitution. It contains the following three lists covering the various subjects. The list 1 central list and 6 list 2 state list and list 3 concurrent list. In this list 1 central list, it contains the areas in respect of which only the parliament, for that example, central government can make a law. And list 2 state list, it contains the areas in respect of which only the state legislature can make the laws. And list 3 concurrent list, it contains the areas in respect of which both the parliament and the state legislature can make laws concurrently. An important tax in India. The first, it has to derive two taxes. The first one direct taxes, and second one is indirect taxes. Under the direct taxes, income tax and tax on agriculture income, and third one the provisional tax, employment tax. And under the indirect tax, goods and service tax. Second one central excise duty on petroleum product and basic customs duty, and third one state excise duty on certain items, and securities transaction tax. Next, futures of income tax in India. So, levied as per the constitution, as per the list 1, union list, it is a central list of 7th central to the or scheduled to the article 246 of the Constitution of India, which authorize the central government to impose tax on income other than agriculture income. And second, levied by the central government. Income tax is charged by the central government on all income other than agriculture income. State government as per the entry 46 of the list 2 state list. And third one, direct tax. Income tax is the direct tax. The person earning income is liable to pay income tax on his own packet. And fourth, futures annual tax. Income tax is the annual tax because it is the income of particular year which is chargeable to tax. And tax on person, it is tax on income earned by the person, the term person. First one, individual and HUF, firm, companies, association of the person, and local authority, artificial judicial person. So these all the one person. And tax on income, it is tax on income the head of 5 income from first one income from salary, and second income from house property, and third income from business and profession, and fourth one income from capital gain, and fifth one income from other income. And the next futures, income of previous year in assessable in assessment year. Income earned during the particular financial year is assessed to tax in the following immediately following the financial year. The year of earning income is called previous year. The year in which assessment of income is done is called as the assessment year. And second, futures charged at prescribed rates. Income tax is charged at prescribed rate. The rate of income tax differ from different incomes and for different person. Administrative next, futures and administrative by the central government. Income tax is administered by the central government, Ministry of Finance, with the help of Income Tax Department. Central government has constituted the Central Board of Direct Tax. Income tax applicability is throughout the India, including the state of Jammu and Kashmir. And last feature, sharing of the tax proceeds between center or state. And through income tax on all income is levied and administered by the central government at the net proceeds accruing to central government is shared with various government. The sharing is done on the basis of ratio and formula laid down by the Finance Commission of India. The next one, documents containing law relating to income tax. The first one, Income Tax Act 1961. The Income Tax Act 1961 is the comprehensive act which consists of 298 section and many subsection group under 23 chapters along with 14 schedules. The Act contains detailed provisions set of classes and deduction, exemptions, and assessment procedures involving appeals and penalties and filing of return, etc. Income Tax Rules 1962, the provisions contained in Income Tax Act are duly supported by the Income Tax Rules 1962 that help in carrying out the purpose of the Act. These rules are prepared by the Central Board of Direct Tax by virtue of power granted to it under Section 295 of the Income Tax Act 1961. Annual Finance. Every year, the Finance Minister of the Government of India introduced the Finance Bill in the Parliament budget session. When the Finance Bill is passed by both the House of the Parliament and gets the assent of the President, it becomes the Finance Act. Amendments are made every year to the Income Tax Act 1961 and other. Circulars and clarification issued by the CBDT. The Indian Central Board of Direct Tax is the apex institution that regulated the overall administration of the direct tax of the country. Section 119 of the Income Tax 1961 empowers CBDT to issue certain order, instruction and direction to the Revenue Department to assist in the interpretation of the law. Assessee. The meaning of assessee. An income tax assessee is the person who pays tax or any sum of money under the provisions of the Income Tax Act 1961. And Section 2, subsection 7 of the Act defines an income tax assessee as anyone who is required to pay tax on any earned income or incurred loss in a single assessment year. And the next one, types of assessee, normal assessee and representative assessee. Like the four assessees there. And then first one, normal assessee, an individual who is liable to pay tax for the income earned during the financial year is known as normal assessee. And second, every individual who has earned any income earned or loss incurred during the previous financial year is liable to pay tax is the government in the current financial year. And representative assessee, there are maybe cases in which a person is liable to pay tax for the income or losses incurred by the third party. So the third party is called as a representative assessee. Such a person is known as a representative assessee. And then representatives came into the picture when the person liable for taxation is a non-resident and minor or lunatic, for example. And third assessee, deemed assessee, an individual might be assigned the responsibility of paying tax by the legal authority, and such individuals are called deemed assessees. Deemed assessee can be the eldest son or a legal heir of a decided person who has expired without the writing a will. And then assessee in default. Assessee in default is a person who has failed to fulfill his statutory obligation as per the Income Tax Act, such as not paying tax to the government or not filling his income tax return. For example, an employer is supposed to deduct tax from the salary of his employees before disturbing the salary. And types of person in income tax. So 7 types is the first one, individual. An individual is a natural person who is citizen of India or a resident of India under the Income Tax Act. An individual is taxed on his or her income. The income tax rates of individual vary depending on their income level. Hindu undivided family, and Hindu undivided family is the types of family arrangement that it is recognized under Hindu law, and Hindu undivided family consists of all persons lineally descend from the common ascendants including their wife and unmarried daughters under the Income Tax Act on. HUF is taxed as a separate entity from its members. Companies. A company is a separate legal entity that it is registered under the Company Act 2013. Companies are taxed on their income at a flat rate. And fourth person firm. A firm is an association of 2 or more individuals who come together to carry on their business. Under the Income Tax Act, a firm is taxed as a separate entity from its partners. And fifth, association of the person, AOP. An AOP is a group of two or more persons who come together for a common purpose other than for profit. And body of individual, BOI is two or more individual who come together for a common purpose other than for profit. And last one, artificial judicial person. An artificial judicial person is the legal entity that it is not a natural person. These entities are taxed on that income at the same rate as individual. And the next one, head of the incomes. The first, it has divided in 5 categories. The first one, income from salary, section 15 to 17. Second one, income from house property, section 22 to 27. And third one, income from profit and gains from business or profession, section 28 to 44 dB. And fourth one, income from capital gains, section 45 to 55. And fifth one, income from other sources, section 56 to 59. And gross total income. The gross total income means salary income plus and house property income plus business or profession income and plus capital gain incomes and plus other sources income. We have to add it in 5 incomes plus clubbing income and minus set of losses. This is called as the gross total income. And total income, the total income, gross total income minus deduction under the section 80C to 80U. And rate of income tax, financial year 2022 and 2023 and assessment year 2023-2024. The income and rate of tax, the first one is the individual, and then income they have to divide at 4 categories, and rate of taxes also. The first one up to 2,50,000, the rate of tax is nil. On next 2,50,000, the rate of tax is 5%, and the next 5 lakh 20%, and then the last on the balance 30% of the rate of taxes. An income tax slab for senior citizens 60 to 80 years, up to 3 lakh nil. Income up to 3 lakh, the rate of tax is nil. Income on next 2 lakh, rate of tax is 5%, and income on next 5 lakh, rate of tax is 20%, and income on balance, rate of tax is 30%. And income tax slab for super senior citizen, individual above 80 years. Income level up to 5 lakh, the rate of tax is nil. Income level and next 5 lakh 20%, and income level on the balance 30%. Thank you.